Ensuring safety and security of diplomats is the most fundamental aspect of the Vienna Convention. And right now, that is what has in many ways been challenged in Canada, that our people are not safe, our diplomats are not safe. If we see progress...
Welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the latest trends from the D Street, and we'll also get you expert views on finding out where exactly should you be putting in your money when it comes to stock markets, the strategies you should adopt. But as a special, we will also be discussing with the management of PNB Housing post the Q2 earnings to understand more insights on the Q2 numbers as well as an outlook going forward from here. But first up, a quick check on how the D Street is moving at this point in time. Remember, it's the fifth straight session of losses for the D Street, and we are seeing pressure built up. The Nifty is now slipped below the 19,250 odd mark, and 64 points of a decline is being seen for that one. 0.3% of a fall for the Nifty 50. When we talk about the sectors that are contributing to this sharp fall, a lot of sectors are in the deep red side in the markets today, led by the healthcare index today, that's down by 0.7%. You also have the IT, the realty space, that's down in trade. The broader markets also, mid-cap 100 space coming under pressure, 0.3% lower for this one. Autos, FMCG, private banks, oil and gas, all of them are also seeing slight losses coming through this trading session. The only sectors that are holding up despite this kind of a move on the downside is the PSU banking index, that's up by 1%, and that's the index that's shining brightest. The metals also follow suit, 0.8% of a rise or rally that you can see for this one. Consumer durables are seeing a 0.25% of a surge, and the small cap 100 index continues to see some uptick as well. On the Nifty, you do see the stocks that are actually falling and especially down in trade, contributing to the losses. Infosys clearly, that's down by 2.6% as well. NTPC, Cipla, Polo Hospitals, Bharti Airtel, these are the top stocks that are declining in trend. However, on the other side, on the Nifty gaining front, you do have the metal pack, Hindalco, Tata Steel as topping the charts. These stocks are up anywhere between 1.5% to 2%. You also have Asian Paints, Nestle, State Bank of India contributing to the gains in the top end as well. As far as the F&O space is concerned, you do have Torrent Pharma, that's one of the top gainers today, 3.5% uptick for this one. L&T Finance Holdings is also moving up. Along with it, Indigo is taking off very well, 2.5% of a move for this one. Jindal Steel and Apollo Tyres, the other commodity-based stocks that are moving up in trade. We'll get back to the markets and find out, how exactly should you be strategizing your move in the markets. But first up, let's focus on the Q2 earnings. PNB Housing has reported its Q2 numbers. Significant improvement in the asset quality. We've also seen that the NII and the net profit during the quarter have seen an improvement. The net profit especially 46% year-on-year surge for this one. We've actually seen the NIMs being steady and the asset quality also continuing to be healthy at this point in time. The loan book and the disbursement were also up by 5.5% and almost 19.5% respectively as well. But to get more insight on these numbers, what has really contributed to the growth in the bottom line and the outlook, now I'm joined by the top management of the firm, Girish Kauski. He's the MD and CEO of PNB Housing, now joining in. Welcome, sir, and thank you so much for taking the time out for this discussion. Good set of numbers, and the brokerage houses have also given a thumbs up to the earnings. They've also come out with higher targets after your earnings have been reported. Help us first understand the key contributing factors which led to the sharp growth on the bottom line, and is this sustainable?
Good afternoon, Sakshi. I think we had a very good quarter two. And if you look at the performance, I think there's performance on all the parameters, whether it is top line, whether it is bottom line, margins, asset quality. I think overall, it's been a very good quarter for us. And starting from revenue, last year, quarter two, we had a one-off. I think discounting that, we have shown a growth of about 17% in revenue. Net interest income, the growth is 35%. PAT growth is 46%. In terms of spread, it is 2.59. NIM is 3.95. And I think overall, if you look at, it's been a decent performance. And as we had guided this year, the book growth is going to be 17-18%. I think we will get there in next couple of quarters because normally H2 will be far better than H1. And on disbursement also, we would reach guidance of about 23+% growth. So I think overall, it's very, very good. I think the reason why we are able to maintain profitability is because of two, three reasons. One, we were earlier focusing on prime. So I think of late we have now moved to more profitable segment within prime business. And number two, we have started affordable, even though we started about 8 months back. There is very good traction on affordable. And we have reached a book of about 750 crores, and very shortly we'll reach the 1,000 crores. And quarter on quarter, we are logging about 65% growth on the affordable business. Even though the book is very small, I think a lot of potential in the next few quarters to come.
Okay. Retail loan growth for you has been about 12% in Q2. I wanted to understand more about the guidance going forward. Are you sticking with the, mid-teens or like higher teens, 17, 18% right here for this entire fiscal?
If you look at the growth on retail, let's say about 3-4 quarters back, it used to be slightly negative or flat. We've been working very hard on this. I think now we've reached to a stage of 12.2% growth on retail book. I think this year our guidance is 17 to 18%. We'll be able to reach 17-18% of book growth. As I mentioned, quarter 3 and quarter 4 will see huge lift in disbursement, and therefore the book also would grow to that level of 17 to 18%.
Okay. You've also been able to resolve a major NPA account, sir, and this is to the tune of 784 crore rupees, as you have reported. Share with us the asset quality outlook that you have for the entire fiscal.
I think our focus in last few quarters, has been to work on asset quality, both on retail and corporate. And we had guided that with every passing quarter, our GNPA on both corporate and retail would keep coming down because our recovery efforts are quite substantial, and our recovery is always going to be more than slippages. And that is what has resulted. I think the one which came through was, kind of a one-off, and therefore we thought that, we would strengthen the balance sheet. So going forward on asset quality, every quarter we will see improvement on asset quality as well.
Okay. Sir, give us a sense on your loan mix, the current mix right now, and where do you see it evolving when we talk about both the prime lending, affordable, as well as the corporate lending and the retail lending, sir?
I think as of now, we are focusing only on retail. Corporate book, we are degrowing because we had to work on the stressed asset pool. I think now it is almost done. So we will restart corporate in about 2 to 3 quarters time. And then, corporate, when we start growing, at its best it will be less than 10%. And out of the balance, the focus on prime and affordable as a mix in next few years is going to be about 60 and 40. But as of now, affordable is very small, so it is gaining traction. Incrementally, this year, I think we will close 12% from affordable, and this mix would keep changing in the years to come.
Okay. So on the net interest margins, I wanted to understand steady or a slight negative this time around, but what is the trajectory you expect?
See, on the NIM, again, if you have to talk about last year, quarter 2, there was a one-off. Leaving that one-off, if you see, there is a 83 bips improvement compared to last year, quarter 2. So YOY, NIM has improved by 83 bips. So we had guided NIM of about 3.5%. This is long-term steady state. As of now, it's about 3.9, 3.95. I think this would be maintained for a few quarters. But as a guidance, we would like to say it's 3.5%.
All right. So let me also ask you about the festive demand, because, we are just at the peak of the festive season right here. How has the demand been for you this entire Navratri? And of course, the festive season started off in August itself with Onam coming in. But this is the peak season where a lot of housing loan demand also comes up for you. Help us understand the kind of loan demand that you've seen on ground, the average ticket size of the loan demand that you've seen.
Demand is quite robust, but I think during the year it just picks up from quarter 3 onwards. Quarter 3 and quarter 4 will be really very good for us as a company and as well as to the industry as such. So there is a huge upside in terms of disbursement for the entire industry in next couple of quarters.
Okay, so what's the trend that you've been witnessing? We've been seeing a whole host of stories say that the demands for luxury houses has superseded affordable housing this entire year. We've seen especially those high-end properties and the numbers being sold off on the first day itself. The property was launched and on the day one it was sold off. Such stories had been like flourishing all across our screens also for a long time. Your own thoughts of whether you've seen the similar kind of a demand for the luxury houses and the loans for that one is much more than the affordable housing?
Premium and luxury houses segment has seen a very significant increase in demand. At the same time, on the affordable side as well, I think the demand is quite robust. Only thing is, given the ticket size, and the effort to build the book on affordable, it takes time, and therefore you would always see that prime and super luxury segment on the overall prime side would look much faster and bigger. But affordable is it's like an annuity business, long-term annuity business. The growth would be very consistent, but I think demand is quite robust.
All right, fair enough, sir. Thank you so much then for being with us on this edition and helping us understand the insights from your current earnings, and all the very best to you for the future quarters as well. Hope to catch up soon again to understand more about the business outlook going forward, sir. All right, and now let's quickly get back to the markets now. Remember, PNB Housing as a company, it's performed well on the stock markets. If you look at the last 6 months, a sharp surge is what we have seen. Today, it's down by 1.5% for sure. Remember, last 10-15 days, the stock was moving up, and therefore this dip after the earnings that buy on anticipation, sell on news is something that you could actually see. Brokerage houses, however, are positive on the company. In fact, a lot of brokerage houses have now given targets of even 880 and odd, therefore going forward from here. If you look at several of the reports that have come about, they're positive on the GNP is definitely improving. Analysts at Motilal Oswal have upgraded the rating on PNB Housing to buy with a target price of 950 as well. So that's a substantial upside from the current levels that you do see from here. And they also believe that the margin woes may subside even going forward. So that is a strong outlook for loan growth, and disbursements is something that is prompting all these brokerage houses to give a positive outlook on the target front as well as far as PNB Housing is concerned. Let's get back to the markets to see how the markets are shaping up. Now about a 98 points fall on the Nifty. So it's slipping away. We've now given up the crucial level of 19,200. Remember, before the time that this downfall started in the markets last 5 days, every time there was a slight blip in the markets or a slight correction in the markets, the technical analysts would talk about that, still support levels are maintained till the time we do see that 19,200, maintained on the street. Right now, you do see a slip coming in. Now, 0.5% of a decline for the Nifty. If it does not hold, then what goes on forward from here? What are the key reasons? That's something that we will continue to discuss with all our experts. But let's quickly see what's really happening in the markets right now. What is contributing to this sharp decline as we now shift to the second half of the trading session as well. Sharp decline coming in as far as the sectors are concerned. You do have losses coming in on healthcare, IT, realty. These are the big laggards, almost 0.8% of a fall coming in from this one. And of course, from the heavyweights, private banks are down by 0.3% as well. Financial services, almost 0.5% of a decline coming in for this one as well. Now, as far as the stocks are concerned, on the Nifty, the top contributors to this decline, you can actually see Infosys as now down by almost 2.8 odd percent, and that is a stock that is heavyweight as well, and you can see the stock declining. You also have NTPC, Apollo Hospitals, Cipla, Bharti Airtel, HDFC Life, Eicher Motors, ICICI Bank, Divis Laboratories. All of these stocks now down by 1.5%. Cera Sanitary, these are the stocks in the broader markets that are falling in trade. The PSU stocks like, BEL, Cochin Shipyard, the stocks that are down in trade right here as well. So those are now even the Nifty banks slipping into the red. Only PSU banks and metal stocks holding forth, although seeing some dips coming in from the day's high point as well. All right, we will continue to discuss more about the markets in our continuous shows and the coverage that we do for you. Do stay tuned on Business Today TV to really find find out what are the key reasons why the markets are falling, how much more correction is due in the markets, and what exactly should be the strategy that you as investors must follow as well. Do stay tuned. Many thanks for tuning in onto this special edition.